Well, good morning, everyone, and welcome to our March 2021 edition of our Mortgage Quality and Compliance webinar. We're happy that you could join us today. We are joined, of course, by our committee chair, Raymond Schneitzevold, with First Line Compliance, and our committee co-chair, Paul Lieber, with CMG Financial. So today we're going to be talking about some, another great compliance topic. But before we get started, I want to introduce my friend Jeff Lurie with the Compliance Group. They are our sponsors for our webinar series in 2021. And Jeff, I'd like to turn it over to you so you can give a message to our guests today.
Certainly. Thank you, Susan. The Compliance Group is very proud to support the efforts of the California MBA, and in particular to sponsor the Mortgage Quality and Compliance Committee this year. And for those of you not aware, the Compliance Group is a 20-year-old women-owned firm serving clients nationwide in 3 core areas: origination QC as an outsourced solution, service and quality control to help proactively monitor and address service and compliance, and compliance services including file reviews and audit work like internal audit, AML, MERS, amongst others. We value working with integrity and unassailable ethical standards. We're passionate about producing the highest quality work and exceeding the expectations our partners have. Thank you very much for tuning in. And Susan, I'll turn it back to you.
Great, thank you. Thanks, Jeff. And always love working with our friends at the Compliance Group. So I want to go ahead and get us started on today's webinar. A couple of just housekeeping items. We will be posting a recording of this webinar on our website, and you can go back to cmba.com to go committees to find this committee. You can see kind of a library of our past recordings as well. So it's a great resource if you've got people maybe on your teams that weren't able to join live. You can always get the recording of that. Also, if you have received the invitation to join today's webinar from a friend or colleague in the industry, and you'd like to be on our email distribution list for our future webinars, just email me directly, susan@cmba.com, and I will be happy to add you. I don't think I introduced myself for those of you who don't know me. I'm Susan Milazzo, and I run the California MBA, so I should have said that at the top of the hour. So I'd like to get us started in our program today. We're going to start out with an update from our lobbyist, Pat Zunzler, who's going to be talking about a few of the priority issues that we're working on in California this year. So Pat, I will turn it over to you. No, I think I might have lost Pat, unfortunately. Oh, wait, now he might be back. Pat, are you there?
I think he's on mute.
Pat, you are still on mute.
Okay, sorry, I'm having some Wi-Fi problems, technology problems. Can you hear me now?
We can, yeah.
Okay, perfect. Is it my turn, Susan? I was disconnected for a moment.
It is,
okay.
yeah. Jeff, yeah, the first, we've got our remote online notaries bill up.
Okay, just to give folks a sense for where things are at, the legislature is just beginning to go through the policy committee process. So there have been just over 2,000 bills introduced, and we're starting to hear each of these bills in the policy committee. So things are going to be very busy for the next 2 months going through that process. First bill I want to mention is a proactive bill that the California MBA is promoting, something that we've been working on for a few years now, AB 1093, and this bill would enact, essentially allow for remote online notarization, something that is not allowed for in California by California notaries. Currently, it's in a very simple form. It just quite literally says that a notary can apply for registration to do RON, and that the Secretary of State would actually put together regulations to create the process for RON. We anticipate that if the author decides to move forward with this bill, he will be putting in more detailed information as to how RON would work, et cetera, and we're working with him in that regard We're also doing outreach to the Secretary of State and other policy makers to help educate them on the benefits of RON and the protections that are involved in RON. So this is going to be, I think, a very interesting effort this year, and something that would be very helpful to the industry if we were successful. SB 373 is a bill that was just amended yesterday with what I think we would consider problematic amendments. Basically, this bill has a laudable goal as far as trying to help individuals that have been victims of economic abuse. I think that, though, by doing so, at least the way they're doing it, it would create some real problems in the marketplace, especially for mortgages. The bill puts into the Rosenthal Act a requirement that if a victim of economic abuse provides documentation, and the documentation is very broad, it could come from a counselor or it could come from an attorney, it could also be a police report, that they've been a victim of economic abuse. And the definition of economic abuse is also very broad. That the debt collector would not be able to collect on the debt. And my understanding is, under the Rosenthal Act, a debt collector would include a creditor collecting their own debt. And consumer debt under the Rosenthal Act would include mortgage debt. So quite literally, somebody could fill out a police report or get some documentation from an attorney, present it to a mortgage lender, at least how I read it, and the mortgage would be dissolved and the lien would go away. So I think that would have some significant repercussions, and this is something that I would ask folks to really pay attention to, and any feedback that you can provide would be very helpful. And then the final bill that I want to mention today is SB 449. This bill is going along the lines of trying to protect, essentially the climate, and incentivizing lenders to promote climate protections. But it's unclear how residential 1 to 4 mortgage lenders would actually comply with this. Basically, what it would require is, a residential mortgage lender in California, even a finance lender in California, to provide a report to the Department of Financial Protection and Innovation as to, an assessment of the climate risk factors in the portfolio that they currently have. Provide information as to how they're helping to mitigate climate risk with respect to that portfolio. This is something that we're hearing, is a topic of discussion at the federal level. This bill would uniquely apply it to state licensees in California. So we do have concerns about this bill going forward, especially in light of what's happening at the federal level. And those are the 3 issues, Susan, I wanted to mention today.
Thank you, Pat. And correct me if I'm wrong, but doesn't SB 449 affect both residential and commercial properties, correct?
Correct. Yeah, it would affect basically each of the licensed entities that are providing mortgage or commercial real estate loans in California. So it depends on how you're licensed, but it basically goes across the board. It does exempt federally chartered depository institutions.
Okay.
It's focused primarily on state chartered institutions and licensed entities.
State chartered. Okay. All right. Thank you. Yeah, we're just kind of getting it. Thank you, Pat, for your update. I appreciate it. We're just getting into the thick of the legislative session. So we will be giving, updates on where we are from a legislative perspective on each of our monthly webinars. So we'll stay tuned for what Pat has to report next month. Thank you, Pat, for being with us today. With that, I will go ahead and turn it over to Raymond Schneitzebull with First Line Compliance, who is our MQAC committee chair. And Raymond, you can introduce today's speakers.
Oh, he's on mute.
Oh, Raymond, I think you're on mute.
Yeah, a lot of people wish they could do that to me. I do that more often, but it doesn't work that way. So thank you again. So it was great. Let me start all over again. Thank you for everyone joining for our monthly meeting. Always looking for good topics to hit, and this time we came around with the URLA. We know it started earlier this month, and it's been delayed for how many years, and finally came into play. And we're dealing with it now. In the grand scheme of things, it's easy, it's great, except we have technology and sometimes have challenges. And what do you fill in this blank? And so we thought it was important to talk about it now that it's been out for a few weeks, so we get some real-time issues and maybe some feedback from all of you as well. With that, we have, excuse me, today we have Stefanie Delmar speaking on this. She's part of the Inspire Home Loans team since 2017, and has been in the mortgage industry since 2006. She is considered one of the country's foremost experts on credit, a certified FICO expert, which, by the way, I find very interesting. We need to talk. Stefanie has helped build in-house credit departments for 3 of the top home builders in the country. She is passionate about credit and getting accurate information out to consumers looking to purchase new home. She resides in San Diego with her husband and 2 golden retrievers. So thank you for joining us. I will also, I have to apologize, the system works here. We also have Scott Weintraub. Scott serves as the internal audit manager for MQMR. He brings nearly 20 years of experience in the mortgage origination and servicing industries, focusing on legal and regulatory compliance, internal audit management, and organizational risk management. You got that one. His mission is to provide industry-leading service to their clients, assisting them in identifying potential harms for compliance and operational risk, as well as identifying best practices. Prior to MQMR's, Scott served as Chief Compliance Officer for several large mortgage lenders in retail and wholesale. He has a BA in political science from Stanford and a JD from George Washington University in Law. Thank you, both of you, for joining and presenting today. So from that, I will turn it over to you guys.
Awesome, thank you so much. All right, well, let's try with the technology and see if we can move the slides forward. Oh, there we are, okay. All right, well, thank you all for having us today. It's an absolute honor to be here. It's been a real treat working with Scott on this over the last little bit. And so we're really excited to share with you our experience with the new URLA. I've had the pleasure for the last, 6 to 9 months being one of the team leads. It feels like 10 years, honestly, but one of the team leads on rolling out the new URLA for Inspire. And so have been nose deep in it. And so the main thing is, why are we here? We're going to be talking about our overview of the timeline and why we had the need for the new URLA. We're going to lightly brush on some key differences with the new URLA, compare the new one versus the old version. And the big thing we really want to talk about is, so the URLA's here, right? We're a few weeks in. Now what? How do we move forward? How can we best support our team? How can we continue to train out and make sure everybody is comfortable, because the URLA is here. It is not going away. We're also going to be talking about some key areas for testing and auditing. And then, of course, we will do Q&A at the end. And so again, thank you all of you for being here with us today. Take it away, Scott. Oops, it went
Thank
twice.
you, Stefanie. And I think, did I go one too far? Okay. Thank you, Stefanie. And right back at you. It's been such a pleasure working with you on this effort. And to the folks at the California MBA and Susan and Ray, thanks so much for including me. It's been great. Let me see if I think I went too far forward. Hang on. Okay, so we know with the new 1003 that obviously, and as Ray said, it's been a long time coming. So Fannie and Freddie, they redesigned the new, and the goal of the redesigned uniform residential loan application was to, in theory, assist lenders by making it easier to capture loan application information from borrowers or potential borrowers. Whether it does that or not may be a debatable question, but and as we know, there were changes to HMDA data collection and reporting requirements. Those took effect, yes, that's not a misprint, 3 years ago. And so in theory, the new version of the 1003 or the URLA allows lenders, loan officers, to collect the information that is needed from applicants in order to comply with the new Home Mortgage Disclosure Act data collection and reporting requirements. As an example, and in particular, the government monitoring information. And over the last 3 years, as the new 1003 has been delayed again and again and again, there's been this demographic information addendum. So for the last couple of years, loan officers have been sending in 2 documents, the 1003, the old version, and this demographic information addendum. And we're finally at the point now with the new URLA where there can be 1 document that gets all the information that's needed from an applicant. So, oh, went the wrong way. Okay. So let's talk effective dates, because anytime there's a law, I think maximum confusion seems to be one of the goals. And so I think in doing that, if there's anything better than 1 effective date, it's 2, I guess. So 1 law, 2 effective dates. The first one was back on January 1st. That was the earliest effective date where a lender or a broker could have started using the new URLA if they were ready, right? March 1st, so earlier this month, was the mandatory effective date, which means any application taken with a consumer on March 1st or after had to use the new URLA. No exceptions, no, that's the date, had to be used. So what does that mean for lenders? It means there could have been, especially, for example, if you're wholesale, let's say, and you're accepting applications from brokers between January and March, there could have been 2 different versions of the URLA, the 1003 coming in, right? Some brokers might have been using the new one, they were ready. Some might have still been using the old one. And some of those loans might still be in process. And we'll talk about that a little bit more as we go on. And then, of course, anything with an app date of 3/1 hopefully has the new URLA, because it's the only option for something on 3/1 and going forward. But the point of this slide, the point is, and this happens a lot with new laws, because there's always loans that are in process already at the time a new law takes effect. And so it means you as lenders need to be ready to be doing it both ways, and to be having loans in your system that have both the old and the new 1003 until such time as all of the old loans with an application date before 3/1 that had the old 1003, before all of those are closed out, either approved or denied or whatever the situation may be. Until that time, you'll still have to be ready to comply with loans with both versions of the 1003, just to make things even more complicated for us. So having said that, I think I'm going to turn it back over to Stefanie, if I can advance the slide. There we go.
Scott, that's a really good point, because, for example, at Inspire, we work for a national home builder. And so we've had people that are under contract, 4, 6, 9 months, upwards of a year. And so that's something we had to look at, these people who are on the old 1003, can they feasibly close before, I think it's February 28th, 2022.
Sure.
And if they can't, what are we going to do about that? So yeah, you're right. It is a very big deal to be able to monitor the 2. And so there is some key differences between it flipped forward in. Can you shoot it back? I don't know what just happened. Okay, cool. It's like it's magically going the wrong direction. I love technology. So
it is. So,
but there are, cool. And it's gone again. I'm not touching it, I promise.
Okay.
Thank you everyone for bearing with us. There are some key differences between the old 1003 and the new URLA. And I swear, making that small adjustment from calling it the 1003 to the URLA has been a big, at least for me, adjustment. But the order is completely different. And for me, when I look at it, it reminds me a lot of the new LE and the new CD that we've been using since TRID. It has a very similar look and feel. And so, whereas on the old URLA, right up front, you've got the type of mortgage, it really doesn't even show up until much later in the application. It's like, part 4 and the lender section. So right up front on the new URLA, we're capturing the borrower's information, we're capturing financial information, and then real estate owned. And I really like how it's broken out on the new URLA. I think it's really slick. Then section 4, that's when we're finally getting into the property loan information. So it's borrower data first, property loan information second, and then the new declarations, which I know we'll be looking at later. I'll be honest, guys, I love the new questions. I think some of the new questions are fantastic, especially the part of, have you opened any credit that isn't on your application? I guess that's the credit nerd in me. And then we've, of course, have our acknowledgements, a brand new section on military service. That's really nice to be able to gather that information. The new demographic info that, as Scott said on the last slide, rolled out in 2018, it's here now. And then last but not least, the loan officer information. So although it looks a little bit different, feels a little bit different, I think the biggest takeaway is borrower data first, lender and loan and property data second. All right, let's keep swimming. And there it went again.
Yep, let me see if I can get it to go one back. No problem.
Cool.
Okay, 1 second.
One more back.
Yep, one back. Okay.
Boom.
Yes. Okay. And Stefanie, I would just add to what you said. I agree with you. I think the layout of the new URLA is, I think, much better, or at least makes more sense, right? When you mentioned what's the first thing, the borrower info. I mean, to me, when you think about someone applying for a loan to purchase a home or refinance a mortgage they already have, what do you want to know? Who is it, right? Who's applying? So I think starting off with the info about the borrower who's applying does make a lot of sense to me too. So that was one thing that jumped out. And then a second thing was, there's a lot more information the borrower can provide about how to contact them, right? And that's really important for a lender for a variety of ways, right? Especially like to keep the application moving, to hopefully, get resolution on it. Even after the loan is funded, maybe, keeping in touch with the borrower from a servicing perspective, to have more ways to contact the borrower, I think is really helpful. And the fact that that's on the 1003 is great. Okay. So having said that, what's another thing that's different about the new version of the URLA? One of them is what to do with multiple borrowers. And so I think all of us who've been in the industry for a long time know that that's always been kind of a challenge, right? When there's multiple borrowers on a loan, how do we get the information? So how would we use, and so one of the things that came with the new version of the 1003 is an additional borrower form. So how can a lender use these documents together? The standard URLA, for example, if there is a loan with only one borrower, versus the additional borrower form, how can that be used if you want, when there's more than one borrower? So of course, if there's only one borrower, it's nice and easy. They use the new URLA and the loan moves on and we're great. So if there's two borrowers, obviously then it starts having layers of complication. So there's a question one would ask. Are the two borrowers, do they have joint financial information? For example, people who are married might have joint financial information. Not always, but they might have joint financial information. Versus if it's two borrowers that have separate financial information. And of course, again, with any law, there's options. So there's no one right way to do it. There's more than one way that it could be done. So one way is a borrower could complete the new URLA plus the additional borrower form. And then the assets and liabilities, the real estate information, some of that information that Stefanie talked about a minute ago, for the additional borrower could be on that form, or there could be a separate uniform residential loan application used for each borrower. So again, there's more than one way to do it. It could really be a decision, I think, that a lender can make. And a little bit later, actually, in the webinar, Stefanie's going to talk about that, or about a way that a lender could do it, right? And then if it's two borrowers with separate financial information, obviously you do the URLA plus the additional borrower form. And again, it's the same thing. There's options. You could report the assets, liabilities, the info for the additional borrower on the URLA, or there could be two completely separate applications. And again, it would be the same thing really if there are more than two. If there are three or more borrowers, then again, you can use any combination of the URLA itself or the URLA additional borrower form. So I think the key here is that there are options. And what lenders can decide is what's the option that will work best for you. Again, Stefanie's going to hit on that in a little bit. But what's the option that's most effective, most consistent? I think that's one thing I would recommend, that whatever you decide as a company for what forms borrowers should use, to be consistent about it. It'll help not only your sales folks, but your ops folks as well. So, okay, so having said that, Stefanie talked a couple minutes ago about how the layout, the format of the URLA is different. So let's take a look at some of the key sections, and I can highlight for you some of those differences. Okay, so I thought the best place to start is page 1. So this is page 1 of the new form, and there were a couple things that I highlighted. I mentioned one earlier already, and that's contact information. So again, you can see there's space for home phone, cell phone, work phone, email address, a lot of different ways of that an applicant can provide information that you can use to contact them. Or again, you can see right at the top, type of credit. I'm applying for individual credit or I'm applying for joint credit. Again, nice and easy, right out there, highlighted on page 1. And then even with citizenship, I know that there are a lot of lenders out there that have some programs, maybe for permanent resident aliens. And of course, there's specific, I think, investor requirements for those. And so that's something, if you can find out up front, really helpful. And again, right there at the top of page 1, there's a place for the applicant to indicate if they're a citizen, resident alien, or even a non-permanent resident alien. So right on there, right next to Social Security and date of birth. So that's a couple things I wanted to highlight just with the start section 1 of the new URLA. Okay, and then on the next page, you can see it's right there highlighted the current employment or self-employment and income for the borrower. So again, I think one of the things that I'd say throughout the new form is I think the layout is a little bit easier to follow. And easier, and I think the highlighted sections are really good. That helps, for example, a broker or a loan officer walking an applicant through the application, or if an applicant is filling out the application themselves, maybe to see what section it is and what information that they need to provide. And again, I think this is all laid out in a pretty straightforward manner. And for example, over here on the gross monthly income side, to be able to see and add up, you know, base, or if there's bonuses, and then there's a total at the bottom. So again, I think it's laid out in a format that should, in theory, be pretty easy, I think, for an applicant to follow or for a loan officer to follow to be able to help an applicant complete the form.
Scott, I will tell you that one challenge that, you know, I've heard from our loan officers in that when they do have multiple income or there's multiple borrowers with multiple incomes, there is no place that actually adds up everyone's income anymore. So now you got to go look at the 1008 to get the combined income.
Yeah. So right. So again, with the best laid plans, right, or the best intentions with this, there's still things that can happen. Anything that's different, I think, breeds a potential for error or missing something, right? So great point, Stefanie. I'm glad you pointed that out for the group. So section 4, as Stefanie mentioned, I believe this used to be section 1. So now it's section 4. And here's the, you know, the property information and the loan information starts right up there with the loan amount. How much does the applicant want to borrow? Again, when you're thinking about a lender who's going to be making a decision on this application, I think it's great to have it laid out right first in this section. I'm going to go back for a second. I've gone the wrong way. Okay. Right there at the top of that section, what's the loan amount? What's the amount of money that the borrower is seeking? And, you know, from there can go right into the system, into the LOS for the lender. So, and again, you can see there's the occupancy as well right underneath it. So again, I think there's good highlighting with the boxes next to it to check for primary, second home, or investment. So again, I think laid out in a straightforward manner is something that jumped out at me right from the beginning when looking at the new URLA. And again, I think the sections flow much better the way it's laid out on the new form. Okay, so demographic information. And as all of us who've been in the industry for the last 3 years know, this has been a separate form that people have been using an addendum. And I imagine if there's anything, for example, that our friends who are in sales don't like, it would be having to use 2 forms instead of 1. Well, so now finally, the information is in the URLA in the right manner, right? And so as you can see, for the race and ethnicity, there is now that additional information embedded within the 1003, right? So for example, on the ethnicity side, if an applicant identifies her or himself as Hispanic or Latino, there's the opportunity to further identify her or himself as, for example, Mexican or Puerto Rican. And of course, there's always the other, and then they could type that in there. Similarly for race, for some of the race categories, not all of them, but for some of the race categories, for example, if an applicant chooses to identify her or himself as Asian, then there are the other options underneath. And that applicant could identify her or himself further as, for example, Chinese or Vietnamese or any of those choices. And again, there is an other. And so again, that goes right into information that would need to go in your LOS on your HMDA screen, among other things, but on your HMDA screen for data collection and reporting. And again, what's the best thing about this? It's now all finely contained in one form. So using one application form can get all the information that we need. I would point out at the bottom, let me go back to that for a second, hang on. Okay, at the bottom, when there's information about was the information for ethnicity or race or gender completed by the financial institution? Meaning, was it their guess because it was a face-to-face application and the borrower said they didn't want to provide it, but the lender would still have to provide that information based on, again, the observation of the borrower and their last name for applications that were face-to-face. But one thing that I wanted to point out about that in this day and age of increased technology, if there is an application that a loan officer would take with the borrower, for example, in the way that Stefanie and I are looking at each other right now on video, that counts as a face-to-face application because I can see her. So if I was the loan officer in that situation asking Stefanie for race, ethnicity, and gender, and Stefanie were to say to me, I don't want to provide you with that information, that's fine, but I would still have to provide it because Skype or FaceTime or Zoom or whatever it would be counts as face-to-face. So again, sometimes law doesn't do a very good job of keeping up with technology. So I just wanted to point that out so you guys can all make sure your loan officers or brokers out there taking application know if they can see the bar, it doesn't have to be like it used to be in someone's office. So again, the way Stefanie and I are looking at each other right now, if instead of doing this presentation, we were taking a loan application, that would be considered a face-to-face loan application. So just something that I wanted to throw out there for everyone. Let's see if I can.
Yeah, that's fascinating.
Yeah,
that's very fascinating to think about for sure. And this is the additional borrower form that we were talking about. And like Scott shared a few slides back, you know, it's optional whether you're going to use it or not. You know, we actually at Inspire had a little powwow to decide whether we wanted to use this form or not. You know, we got underwriting, we got compliance, and the training team and IT, all of us circled up to try to weigh the pros and cons of utilizing the additional borrower form. What it came down to for us is we believe that using the additional borrower form would really benefit us in that if they have shared income or assets, they would all show up in one place, one form. However, when we were looking at the borrower's experience, if I've got a husband and wife and say the husband's the primary on the loan, the wife would get this form sent to, you know, her document portal, and there'd be really no information on there. It would say, see other applications, see the initial application. And so we made a business decision that each individual borrower, regardless of if they had a shared financial interest or not, would get an application with their own information on it. Now we utilize Encompass as our LOS, and there's a way that we can actually, we are having our underwriters utilize this form as a means of being able to consolidate everything for when they underwrite a loan. So we're actually technically using both. Borrower facing, they're only going to each see an individual application, but internally we are allowing our underwriters to utilize this form so they can have everything in one place and be able to do a more thorough underwrite. So I thought that was fascinating. But again, when you utilize this additional borrower form, do keep in mind that the additional borrowers will receive considerably less information, and then they're going to have to ask borrower one, you know, if they really want to see everything that's disclosed on the loan application. So it's just things to consider as you're making your business decision. There's really no wrong or right way to do it, but you know, I do encourage all of you to weigh out what is the best experience for the lender, and then of course, in my opinion, more importantly, what is the best experience for the borrower.
You know, Stephanie, ooh, I went one too far. I thought that was really valuable information about the way it works in your system and how the folks on your team at Inspire are using the information in the system. Because again, that's really even the more important part, right? You have an application, a document that comes in that the loan officer took, for example, with the applicant. But in order to do the loan correctly, and by the way, report things to all the entities to whom data needs to be reported, right? There's HMDA, there's information that Fannie Mae and Freddie Mac might get. All of that information needs to be reported correctly, and that comes from the system, right? So,
Absolutely.
okay. So, yep. So, having said that, what can you? Ooh, I think I went one too far again.
Yeah, one too far again.
Okay. What can you, as a lender, be doing to ensure that you're fully complying with the requirements associated with the new URLA? And so, what Stefanie and I thought and wanted to share was there's several different pieces of this that are important. One is your people, and Stefanie's going to start us off by talking about that in just a minute. Making sure your employees are up to speed on the new URLA, and not just that it's a new form and how it's laid out in the sections, but what does it mean, to Stefanie's point earlier, about how information is input in your system, and that carries on all the way through the loan process, right? So again, that leads to the second point, technology, hugely important to make sure you're complying effectively. What other resources might you have at your company to be able to help make sure that things are going well and that you're complying? And finally, of course, testing. Are you looking at your loans? And we're going to talk about, when we say looking at loans, we're going to get back to that point, starting with loans that might have an app date prior to 3/1, because it's March 25th today. So most lenders, if not all lenders, probably have many loans that are in their pipeline right now that had an app date before 3/1. And of course, you have many loans in your pipeline right now that have applications on 3/1 or after. What does that mean? Again, it means two different versions of the 1003 are in your system right now, and probably at this stage, a lot of both. What does that mean for what you should be testing and how? So we'll get to all of that. Stefanie's going to start us off with some thoughts about, one second. Oh, I went one too far. Training. There we go.
And there goes the puppy, of course. So yes, you know, training is absolutely key. And I love this graph, you know, what areas of your organization need to be fully trained on the new URLA. And like I said here, hint, it is not just production. The new URLA impacts everybody. And so it is obviously compliance and loan officers. You know, those are the two biggies we think of. Well, yes, of course, obviously it impacts compliance and loan officers, but what about your operations staff? You know, your loan processors have to go into your system and be able to read, you know, the new URLA, or, you know, they get the earnest money check. Oh gosh, where do I put the EMD? It doesn't go under, you know, assets cash deposit anymore. It actually goes under a assets section where there's a drop down now, you know, or gosh, there's a lender realtor credit. Where do I put that? Or even a gift funds, you know, gift funds are in a completely different section outside of assets. It's in section 4. So again, it's important as your operation staff is, you know, obtaining conditions and updating information, they got to know where to go. You know, we talked about this on our previous slide, but underwriting, you know, bless underwriters who've been underwriting for 25, 30 years, and they are used to that 1003, and man, they do not like change because they still want to print out and have, you know, the paper document and still be able to mark all over it with their pencil. And it is completely different now. And so one thing that we really took time in setting this up was making sure that underwriting was on board all the way through, and underwriting was involved in the decisions. And we also, you know, my co-team lead, Christy Kingsland, who I know is on this call here, has done a phenomenal job. She's a former underwriter, so having her on this team has been just amazing. You know, she's spending extra time with the underwriters to get them comfortable with the new URLA. And of course, closing and funding, same deal. Post-closing needs to know about this as they're getting additional conditions. And obviously IT, because IT's got to be behind the scenes putting everything together. So it's really focusing on making sure the entire company is not just prepared, but comfortable and understanding the difference between the old 1003 and the new URLA. So we put together a bunch of videos and we have them on our intranet readily available. We assign them as to-dos for basically everyone in the company, I think even accounting, to make sure everybody is aware. You know, take an hour out of your day and walk through the new URLA, what's not here that was in the old 1003 and what is here that was not in the old 1003, so everybody can be on the same page. All right, click. Let's see if this works. All right, and so I love this slide. How can training best support the team? You know, as far as, you know, if anyone on here is involved with training, the big takeaway I want you to get from this is training does not stop, or did not stop on March 1st. You know, it has to be continued. And like I said on this first bullet, this change does not just impact production. So we want to be, you know, sympathetic to the other departments and continue to offer and delayed training for other departments. So like we, for example, went live on February 22nd. But we knew that processors, even though we trained them up the week before, they wouldn't be seeing the new URLAs for a few weeks. Same thing with the underwriters. You know, they're not going to be getting them right away. The loan officers are going to be busy, you know, putting together the files and getting them into underwriting. So on March 1st, we had a training specifically for the underwriters, and we, you know, are continuing to do delayed training because we realize it's going to be a domino effect and the other departments are going to be getting their hands on this later. So they're not going to remember what they learned back in February if they're getting their first loan today on the new URLA. So again, you know, continue to offer additional training for the other departments as they're actually getting their hands. Another really important thing that we did during our testing is we did not have IT do all the testing. We had subject matter experts in all departments. And so we have both a builder and retail division. We wanted to make sure that we had subject matter experts in production, in processing, underwriting, closing, even the lock desk. So that way, you know, if somebody needs help, they can reach out to a core group instead of picking up the phone and hoping and praying Stefanie's available. You know, they now have 5 or 6 people they can reach out to. So we did some additional training with these SMEs, and we wanted to make sure they were empowered to help us answer questions that perhaps we couldn't get to. We also have a centralized location to track all issues and make sure the appropriate parties have access to it. We utilize Smartsheet. That's not a endorsement, that's just who we use, but we have it as a central place to track all of our issues. And we do actually utilize the Knowledge Coop and have a specific section for new URLA questions. And we've got about 12 people flagged in there that when somebody goes in and asks a question, 12 people will get an email and somebody can go in and answer it. And if we don't know the answer, we'll find it out. So again, you know, organization really is key. And as we've gone through this project, we really have defined roles, and it helps everything flow smoother because everybody knows what their job is. Another thing that we're doing weekly is we're hosting office hours for Q&A and additional support. The first 2 weeks after we went live, we had office hours every day. And I mean, we had anywhere between 8 and 20 people show up to office hours. And the majority of them just came to listen, to hear what issues other people were running into. But again, making sure we have support, we have communication, we're all in this together. And then the last thing, I know this is common sense, but it is important to make sure all training manuals and job aids are up to date, even when it's involving running AUS or, you know, anything with a third party that perhaps is impacted by the new URLA. So communicate, 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 and keep the conversation going, because this change, you know, it's going to impact things that we're not even aware of. So that's why it's important to stay on top of everything.
Stefanie, thank you. First of all, that was all fantastic information. I just want to emphasize for a minute two different things that you said. The first was, you mentioned towards the beginning when you were talking about training, that when you had trainings for folks at your shop, you recorded them. Yes. I think that is critically important for many reasons, but one of them is when we think about what's happened over the last year plus, right? Particularly with the interest rate environment that we've been in. One thing that I can tell you with 100% certainty is I know every client we work with, and I mean every client that we work with at MQMR, has told us one thing, which is they've been overwhelmingly busy And among one of the biggest risks and challenges that they faced is hiring people to keep up with that volume. And so, for example, it's not just in a given week or day you have 1 or 2 new people coming in. There are waves of new employees coming in, and there may be employees, leaving it as well or whatever. But because of that, there's just waves of new employees coming in. To have these trainings recorded that these new employees can go and look at, what does that foster? It fosters everybody getting consistent information. So, for example, if you as a lender are hiring someone new today, you would hope that they've been through a lot of training about the new 1003. But number one, you don't know for sure that they have. You'd hope, but you don't know for sure. But secondly, even if they have gone through training, does it mean that they know how to do everything the way that Stefanie's company wants to do it? Now this person works at Inspire, right? Everybody's going to have some parts of their process work a little differently. Or maybe, for example, Stefanie mentioned that at Inspire they use Encompass. Maybe the person that they hired used a different LOS. So the fact that, so I would just highly recommend what Stefanie said. If you're going to be doing trainings on this, if you can record them, I think it's a really great recommendation. The other thing I wanted to emphasize is what Stefanie put at the bottom of that slide, which is communication. I think she said it 3 times with exclamation points. I can think of an example right off the top of my head of why that's so important. Let's say you're a wholesale lender and you get a loan submitted by a broker. We love our friends, the brokers, but let's say a loan comes in and the application date was today, let's say March 25th, and it's the old 1003. So here's a question. When in the process would we want to find that out and communicate it? You would want to find that out as soon as possible, right? So you can go back to the broker and say, you know what, could you start over? Could you actually take an application with the right form and submit it back to us? As opposed to if someone goes on, they're like, I see information, I'm going to put it in Encompass, I'm going to go on, and you're at the end of the process, the purchase contract has an expiration date in it or something that's here now, and you realize, oh my gosh, we're going to close this loan and it used the wrong 1003. So the more communication you have, you want to know those issues right up front, because you can do something about it in a way that hopefully won't impact the borrower, won't impact your company's reputation, won't hurt a relationship. So again, that communication, Stefanie, critically important. Okay, so that was training. What else is important? One is, and Stefanie hinted at this as well, is to make sure your policies and procedures are updated. Anytime something changes, this is an important part of the process. Because, for example, whether it's an existing employee wanting to remind her or himself of something, or again, if new employees come in, they're going to be looking at your P&Ps. And so they, of course, need to be updated, especially with something as big as a new application form. And so what we've listed on this slide are, again, what did Stefanie mention when she first talked about training with that spiral rainbow type graph? It affects a lot of different departments. And so we listed a good number of examples of different policies or procedures that would likely need to be updated with at least some information related to the new 1003. Obviously, if you have an applications policy, but again, operations and processing, Stefanie hit on that as well, and underwriting. Your HMDA data collection and reporting policy definitely needs some updates. Now, again, there's only one application that you need. You don't need the separate addendum. And of course, there's some compliance policies that would need some update. So, and just as a reminder about the point is at the bottom, even if there aren't changes that might require updates, on an annual basis, you should be reviewing your policies and procedures to see if they need any updates or changes, or if you know, for example, with the 1003, there needs to be updates, to make sure that those updates have taken place. And then whoever approves those, if you have a board or executive management, they should be approving those on an annual basis. So by now, new policies and procedures should be written that include everything that's needed from the new 1003. Okay, so testing. So a really important element is testing. In other words, how is it working out, right? Are your loans having the right 1003? And when I say the right 1003, again, it depends on the situation. At least we're still in a stage where it depends on the situation and the date of the application. And the tip, I think, if there's one tip that I could give you that's super important, is you can't always rely on your LOS doing everything right. And I would say, Stefanie mentioned Encompass, but I'm not singling out Encompass. Every LOS system, I think they're all great in their own ways. What do they all have in common? They're not perfect. There's no LOS that's perfect, and there's no LOS that is issue free. So what does that mean? You need to be looking at your own loans. And for something like this, one recommendation that I would have is you should be looking at least a sample of loans that are in process. Again, don't wait just to review loans after they've been denied or funded, because then it's too late to do anything about an issue that you may find. You should be looking at loans that are in process. What's one of the first things you should be doing if you're testing loans right now? Again, it's looking at the application date. That's the first thing I would recommend. Is it 3/1 or after? If it is, that's easier, right? Nothing easy with compliance, but it's easier if the application date is 3/1 or after, because what do we know? Must be the new 1003. No option if the application date is 3/1 or after. If the application date is before 3/1, again, it could be the new 1003. Or it could be the old 1003. Why is that important? Because all throughout the process, there needs to be one 1003. You need to use the same one up front as you do when the borrower signs a 1003 at closing. So if the app date is before 3/1, but they use the new 1003, then you need to stick with the new 1003 at closing. If, though, the application date was before 3/1 and it used the old 1003, that's okay, of course. But at closing, it needs to be the old 1003. Only one version of the 1003 in a file. So again, when you think about your system, it still needs to be able to produce the old 1003, even though we're 25 days in to the mandatory effective date for new applications. But if you have a loan that's closing today and the application date was in February and they use the old 1003, your system needs to spit out the old 1003 for closing. Again, they should have the ability to do that based on that app date. The rule should be based on the app date and the 1003 that was used up front, but it's something you need to test. Because anyone who looks at your loans, a regulator, an agency, investor, will notice if you have both the new and the old 1003 in your file, and they're going to react to it in all kinds of ways. But one thing they'll have in common is they'll all be bad. They'll all be something less than happy with it. So again, those are the areas where your testing should be focused right now. And again, I'm not suggesting that I don't know offhand that LOS systems have had issues in this manner. I know they did back in 2018. That I do know. Hopefully they've learned from those, but it's something you should be looking at. Again, don't rely solely on your LOS doing everything right. Because again, even if you tested it in your LOS before the 3/1 launch date, when things go live, sometimes things happen that you don't know about until it goes live. And there's unintended consequences and things that just don't come out when it's in the test environment. So again, you want to be looking at loans even while they're in process. So if you find something, you can do something about it. Now, let me hit this again, see if I can go forward. Okay, and so again, this should also be something that's part of your internal audit program. So whether you at your organization, if you have an internal audit program yourself in-house, or if you partner with a third-party company like MQMR, for example, how would changes like this impact your internal audit program? Well, again, what was something that both Stefanie and I have been hitting on today? Changes to the 1003 is an example of something that affects many different departments. And look how many we've listed: compliance, governance and risk, underwriting, IT, sales and operations, of course, training, HR, because a lot of companies HR training is part of HR. So when you have an internal audit program, you will be looking at over time all of these different departments that are listed, right? So what does that mean? The questions that you're asking or the scope of what you're reviewing in an internal audit of all of these different departments will need to be updated to include some questions or some areas of focus related to the new 1003. And so again, there's, I think a lot of people might think, well, this, like what Stefanie said, this impacts compliance because it's a compliance thing, or this impacts loan officers because they take the applications. Again, look at how many departments this affects. And so again, when you're thinking about internal audit, whether you're doing it yourself internally or with a third party, all of these different areas are going to have updates to what would need to be looked at as part of internal audit. And again, what would that encompass? P&Ps, your change implementation process, your training process, testing, internal controls. So when you talk about internal audit, all of these different areas, again, there'll be new things to look at based on the new 1003 for all of these different departments that we listed. And so with that, I think Stephanie's going to take us home.
Yeah, absolutely. And you know, I can't stress this enough, Scott. You're not kidding. Don't rely on your LOS, and even furthermore, if you utilize a POS or you utilize third-party services, don't rely on them either. You know, everyone kind of was flying by the seat of their pants. I think, you know, for example, USDA with GUS, they didn't even have the new GUS ready to roll out or test until 3/1. And same thing with LP. You know, we held our breath when we went live with LP that it would work. So, you know, the biggest challenges to, you know, as far as my takeaways, you know, about a month into this, the number one thing is willingness to accept something new. You know, just continue reiterating to your team the new URLA is not going away, and acceptance is key. It's here, it's staying. So let's find the best ways that we can utilize it to continue to do our jobs. Like I just mentioned, you know, really keep an eye on the interaction with third-party sites and things we can't control, whether it's utilizing a POS. So for example, we utilize Blend, and there's been some challenges with them, you know, as far as information mapping properly into Encompass. AUS, you know, findings now because of things going into different places, we're getting some new funky errors that, you know, pop up. And there's now, when you run DU, there's a general error that you have to double click on now to see what actually the error is. And a lot of people just see the general error and panic. But it's, you know, again, empowering your team to know, hey, if this pops up, double click, read what the error is. And sometimes things are mapping multiple times. Sometimes there's a phantom VOM that pops up out of nowhere. And then of course the bond programs, because same thing, you know, if you utilize bond programs, some of them are more equipped than other to handle the new URLA. We kind of talked about this earlier, but the ability to easily locate certain fields in the LOS, like for example, in Encompass, we could not find the day one certainty fields. They were not in the Fannie Mae additional data anymore, and they went MIA. So we actually had to contact partners who we run credit through, and turns out there's this hidden screen on Encompass we didn't even know existed, that all the day one certification validation fields are now. So again, things have moved around, and things that you wouldn't expect to have been impacted by the new URLA are being impacted. And data integrity is more critical than ever. You know, Scott said it best: when we get busy, we get sloppy. And, you know, it's true. The sloppier we get, the more there's going to be an error. The more there's going to be, you know, you're not going to be able to run DU because you didn't put the start date of their current job. You know, there are things that you didn't have to think about before, or, you know, if they're buying an investment property, putting the present housing in. So again, you know, encourage everyone to slow down and, you know, really focus on data integrity. And then of course, we talked about this earlier, expect the unexpected challenge. I mean, we kept saying before we rolled out, you know, there's going to be something. I don't know what it is, but there's going to be something, and we'll be ready for it when it comes. So it's important that everyone on your team communicates, you know, compliance, training, IT, you know, even talking directly with the field, you know, asking a loan officer how it's going, asking a processor what they can't find, asking an underwriter, you know, what is impeding you from being able to underwrite a loan in a timely manner. Hear what everyone's saying, so that way you know how to train out moving forward. Because it's going to get easier, and in 5 years we're going to barely remember the old 1003. I mean, shoot, you know, did we think we'd be able to adjust from switching from the good faith estimate to LE? It's second nature now. So, you know, this too shall pass, and this is going to become second nature. So that's really all of my key findings. And I think that's it.
Yeah.
All right. Well, thank you for covering that. I think, Susan, we have to talk. I think we should get these two together and do like a compliance morning with Steph and Scott every day.
I know, we were,
Who needs
you
coffee?
guys, yeah, a great presentation. You know, tricky, a lot of content to cover, but thank you. You guys did an awesome job. If anyone has any questions for speakers, you can pose those in the questions dialog box. I'll just reiterate that we have recorded today's webinar and we will make it available on our MQAC committee site on the California Mortgage Bankers Association website. So that'll be available probably in the next few days. I will continue to monitor this. Sometimes the people will post questions, you know, as we're wrapping up. So again, if you have any questions, you can put those in the questions dialog box. Just as a note, our next month's topic will be on federal and state regulatory updates. We're going to be welcoming Scott Brooks with Quicken and Michael Flynn of Buckhalter. So again, if you were forwarded today's invitation for the webinar, you can email me, susan@cmba.com, and I'll be happy to add you to our distribution list. I think that is a wrap today. Scott, Stephanie, thank you so much for a wonderful presentation. We really appreciate it. And everyone have a great rest of your day.
Thank
you so much for having us.
Thank you.
Bye, everyone.
Bye.